Be Wealthy and Smart, episode 1033.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we have a very special guest, and I can't wait to share him with you and our amazing interview. But before I do, I want to tell you why I invited Joe Indoso on the podcast. As you know, I don't often interview many people, but Joe is somebody I wanted to talk to about private equity. Being able to invest in private companies means that you own them at a share price that's typically lower than what they will eventually sell for when they have their initial public offering or IPO on the stock market. Today, I've invited a Link to executive onto the podcast to talk about how they are democratizing private equity investments for investors, but also some specific private companies that are available on their platform. I really enjoyed this interview, and I think you will too. It's my pleasure to welcome to the show today Joe Indoso, who's the COO of Link2, a private equity firm that I've been investing with myself, and I'm so excited to share more information with you about today. Welcome, Joe.
Thanks for having me on the show, Linda. Pleasure and privilege to be your guest.
Well, I am so excited about what you're doing at Link2. And before we get into that, could you just share with our listeners a little bit about your background that's so extensive and perfect for your role today?
It's actually, for the most part, quite boring and mundane. So I spent most of all of my professional life, actually, prior to 2016, as an investment banker. Half of those years, I was an investment banker, focused on non-technology sectors like energy, commodities. And then the other half, I was a technology investment banker. I worked for a number of large global banking firms, and then at a certain point in the 2000s, decided that I sort of had enough of working for big companies and wanted to be an entrepreneur, so I left and founded my own little boutique investment bank in San Francisco. We expanded eventually to overseas because we were focused on emerging markets. Ended up selling that firm and founded another merchant banking firm that's based in Washington, D.C. and is still around today with some friends and partners. But in 2016, I was very, very captivated by what was happening in the whole blockchain technology and digital asset space, Linda. And, I know from our personal conversations that you kind of went through a similar type of revelation. I certainly did, and I felt that we were on the very, very cusp of a very significant transformational type of innovation that would change the way a lot of industries function, including the one that I came from, by the way, financial services. So I decided I wanted to get involved in some fashion, in a very direct way, in that wave of innovation and the value that was going to get created going forward. So I sort of left my day-to-day management responsibilities for the firm in D.C. and got involved with a crypto startup. Did that for about 2.5 years, took it through 3 rounds of funding. The company is still around today. But in 2019, it became obvious to me that what we had built at that company was maybe a little too early for the market, right? We were betting that institutional adoption of crypto trading was going to happen at a certain pace, and it turned out to be a little slower than we thought. And so we had a really good product for which there was not a ready market. And it was around that time that, I met Bill Heiress, who's the CEO and founder of Link2, and he was in the process of pivoting his company, which at that point had been, a technology services company that was building mobile apps for banks, wanted to pivot it to a totally different addressable market. And that addressable market basically is what we work in the Link2 of today. So I joined forces with Bill in 2019. We launched the Link2 investment platform in February of 2020, and it's been a fantastic, run. And, where the whole digital asset thing comes in is that our ultimate goal is to take this private market, platform that we're building and move it on chain. So we are now that we've built a critical mass of investment capital on the platform, a critical mass of users, we're starting to migrate that, and we're going to eventually tokenize all of these offerings in private equity so that they can trade on a blockchain-based exchange.
That is so exciting because you're not only offering other companies that are on the cutting edge of innovation, but you're a cutting edge innovation company yourself at Link2.
We have to be, right? One of the things I learned from prior waves of technology innovation, and I think particularly of the internet, which has very, very close parallels to what's happening with blockchain, is that unless you're willing to disrupt yourself, someone's going to come along and disrupt you. And so we live with that ethos at Link2. We're always thinking, okay, it's great that such and such is working. Like, what do we have to do now to move it to the next level and not wait for somebody to do it for us? And, one of the things I learned from having been a traditional investment banker working in traditional investment banks is that the culture that gets created in organizations that are that large and that rooted in tradition is actually the exact opposite. There's a resistance to change. There's a wall almost against any form of disruption, and so they leave themselves in a way vulnerable, right, to the kinds of changes that are going to take place outside, and those changes end up being forced upon them, right? I mean, look at Jamie Dimon, at JP Morgan Chase. I remember back when I was doing my crypto startup in 2017, he was out there saying all of this stuff is completely worthless. Nobody in their right mind ought to invest in it. And actually, any employee of my firm that has anything to do with this crypto nonsense is going to lose their job and get fired. Right?
That's right.
Well, fast forward to today, guess what they're trying to do? They're trying to get in the game now. They're setting up, trading desks to try to service their institutional clients' demand for exposure to cryptocurrencies and other digital assets. Their private wealth groups are running around trying to learn how to allocate their clients' money to the space. So they're behind the eight ball. They're trying to catch up. And it's people like you, Linda, who have been independent-minded that actually have the lead on that, right?
I do try to provide the most up-to-date information financially to people so they can make their own decision. And I think you're right. And what you're pointing out is that right now with crypto, the wealthiest people in the country are the ones who are investing in it. And the endowments and the family offices, these are the people that are trying to get more and more invested in crypto because the returns are unlike we've ever seen before, which is why I wrote my book, because this is the opportunity really for people to get in almost at a venture capital level. And since you've been involved in venture capital, I wanted to hear your opinion about that.
Yeah, the single best driver of investment return is entry price. And there's been loads and loads of academic research on this, right? You can look at a whole variety of different factors that contribute to total return, but the single most important is simple. It's entry price. And what that means basically is, it's better to buy cheap than it is to buy dear, right? So you want to get into something before it becomes fully valued. When you think about equities and about the stock of companies that have future promise, better to invest earlier than later. Better to invest while those companies are still private and not fully valued, which is what's going to happen when they finally list and trade on the public markets, right? So what we're trying to do is allow the little guy a way of playing the game that all those wealthy parties that you just referenced, all the venture capital funds, the private equity funds, the hedge funds, the big global family offices, the billionaires, they've been playing that game very well and earned tremendous returns over the last 30 years, right? And there isn't a single asset class outside of crypto that has that same type of return, where you're able to basically, over that same period of time, earn 8 times what you would have otherwise earned in investing in broad public equities. But that only happens if you're able to invest early. Now, those big institutions you talked about, they have the access and they have the capital to play in that private market. And those are traditionally the two requirements. You have to know people, you have to be part of the club, you have to have access to the deals, and then you have to be able to write relatively big checks, right?
That's right.
What we've done is opened it up so that you don't have to be a billionaire. You certainly don't have to be an institution like a venture capital fund or a private equity fund. You can just be regular Joe and Linda, and you can cut a check as small as $10,000 to make an investment in a company like Dapper Labs, which is still private and is looking to go public in the next year and a half, right? Why wait for them to go public? Our investors invested in Coinbase, which is the largest crypto exchange in the United States, at a volume-weighted average price of $32, right? I mean, I haven't looked at the ticker today for Coinbase, and it's, we're kind of in a correction mode in the stock market today, so I'm sure that their price has gotten beaten down significantly. But even then, I would guarantee you that price today is probably anywhere from 6.5 to 8 times $32.
Right. Well, Coinbase was one of the best investments, as I understand it. There was an article that I believe Forbes wrote about the top venture capitalist, and one of his investments was Coinbase, and that led to the success that he had. But of course, people who invest do have to qualify as accredited investors, which means they have to have $1 million of net worth outside of their residence, or $200,000 of income for 2 years, or $300,000 of income as a couple. And there's some other ways that they can qualify. So unfortunately, we do have some regulations that we have to contend with, and that's because there isn't as much liquidity with private equity as there is with publicly traded securities, in that you have to wait until they have their exit as an IPO to be able to get your liquidity back. But you're also working on that, I understand, too.
We are. You've mentioned two of the big problems that are sort of our next challenge to solve at Link 2, right? We've opened up access now, and so problem number one that you described is access is still restricted by accredited investor regulations, and that's absolutely true. And because we're a regulated entity, we do have to comply with the SEC's requirements. Having said that, right, our vision is twofold in that respect. One is that we're going to utilize the existing regulations that pertain to crowdfunding, regulations A+, and perhaps CF, and figure out ways by which we can utilize those regulations to open up some of our investment portfolio to participation by regular retail folks, people that aren't accredited investors. So that's one path we're pursuing. And then the other path is that we're aggressively, now that we've become a bigger business, going to seek ways to help the SEC understand that if you allow access in a reasonable and an intelligent way, right, you can basically educate your customers enough, sensitize them to the risks of investing enough that they can make prudent decisions on their own behalf without necessarily being accredited investors. And so that basically is about working with the SEC to allow Link2 to work within maybe a looser framework that, within certain parameters will allow us to bring in non-accredited investors as long as they are able to display a certain level of financial knowledge, sophistication, and ability to withstand some of the risks associated with private investing. The second problem we talked about is liquidity, right? Because traditionally, private equity, venture capital investments are illiquid. And, when you look at the historical fact that all the investing has, for the most part, been done by these big institutions and super wealthy people, that's actually not been a constraint to them, because when you've got bags of money and you're only allocating a certain percentage to these private investments, you don't really care, and it doesn't hurt you that much that they're illiquid. But that's a different story for regular folks like us, right, Linda? Liquidity is much more important for us because it's about our day-to-day lives. I mean, I don't know that 2 weeks from now, my dad's going to be in the hospital and I'm going to have to take care of him, or my kid's going to be going through a rough patch and I need to help them with housing, or, there are these life events, or, my wife and I just want to buy a second home somewhere, right? And we need to put down a down payment. So these are life events that drive our need for liquidity as individuals that maybe aren't important for those big institutions or those super ultra high net worth people, right? But they're important for regular folks. So we need to solve that problem at Link2 if we're going to truly democratize the space. And the way we're going to do that is that we expect to receive a license from the SEC in the next 90 days to operate what they call an ATS, that's an alternative trading system. And we're going to build an electronic platform that will basically allow our customers to very easily resell their investments on Link2 to other members on Link2 if they so choose. So for whatever reason, something comes up and you decide, what, I need the cash today. I can't wait for Ripple Labs or whatever company it is I invested in to go public. I just can't. I need some cash. You can turn around and sell it on the platform. Or, the other motivation might be that, you might want to take a profit on that position before Ripple Labs goes public. I mean, we had early investors that invested in Ripple at prices that now yield a profit, right? Compared, let's say invested price lower than where it is today. So they might want to take that profit today and not wait necessarily for Ripple to go public. They don't have to do it with all of their investment. They can do it for some, right? And then again, that platform allows them to monetize and realize that gain. And eventually, as I said, because of our blockchain-driven vision, all that trading will happen through the trading of digital assets. All this equity will be tokenized, and there'll be a digital asset form, so it'll become tradable on our platform. And we anticipate partnering also with other security token exchanges and crypto exchanges to list those Link2 tokens, so that they end up being liquid not just on the Link2 platform, but they'll be liquid on other blockchain exchanges as well. And that maximizes the liquidity available to our customer.
I love that. And I love the innovation that's going on, and as you say, the move to the chain, and that you're working with the SEC on these really revolutionary changes in fintech, and the fact that this industry that has been so closed to only the wealthiest, to only the billionaires, is finally opening up, is finally getting accessible to everyday investors, is finally coming down in their minimums. Private equity historically has been a $100,000 minimum investment for people. You're at $10,000 on Link2, which I love. And what you just described is that you'll be able to come down possibly even lower in your minimums.
Correct. I think it's just a matter of time, and as we move to more, blockchain-based technology, our ability to cost efficiently fractionalize, share interests will increase, and that's basically going to allow us to sell smaller and smaller investment sizes.
That's amazing. So let's talk about some of those investments that are on your platform, because you've mentioned Ripple Labs, which I'm personally invested in also. It's no secret that I'm a big fan of XRP. I wrote a book about it and wanted to make other people aware of this incredible investment opportunity. But once I became familiar with Ripple Labs and their story, and of course the lawsuit and what was going on, I really felt like having the opportunity to invest in this company, especially during the lawsuit, created a special situation, which not only maybe delayed their going public and allowed me to invest, but also probably kept the price at a more reasonable level than it might otherwise have gotten to. So I feel very, very fortunate to be a Ripple investor on your platform.
Yeah, no, that's a really good point. And to be honest, it's the reason why we've continued to consolidate our position and increase our exposure to Ripple, because we do think that it's a situation where not only are you investing based on, your belief that the fundamental value of this company is going to increase significantly in the future, right, because of the use case they have for XRP in the international payments processing space, but also because it is a special situation, like you talked about. The price has been artificially repressed because of the chilling effect the SEC enforcement action has had on them. I mean, let me, give you an analogy. At about the time that we invested in Ripple Labs, which was in early 2020, we also invested in Coinbase, right? At that time, Ripple's valuation, based on their last equity funding round, their last venture capital round, was $10 billion. Coinbase's, surprisingly, was actually less. Coinbase at that time was valued at about $8 billion, $2 billion less than Ripple at that point in time. You look at Coinbase today, even in the bear market, it's probably a $32 billion company. Look at Ripple. They're kind of at the same place.
Mm-hmm. Yeah,
right?
That's right.
So, I mean, if Coinbase in that same time period went from 8 to 32, and it's gotten as high as 85, right, before the current stock market correction, then that gives you a sense of what the possibility might be for price appreciation under both strong as well as adverse market conditions for Ripple. But in no case is Ripple going to stay at $10 billion. And the great news is that because of the price repression, we're able to still make investments in Ripple and offer it to our customers at a discount to that $10 billion.
That is so exciting.
Our customers are investing today at about $6.87 billion valuation of Ripple. And actually, Ripple used $200 million of their own money, right, with the approval of their board, to buy back some of their stock a couple of months ago at a $15 billion valuation. So that gives you a sense of, that they clearly believe that the company's is worth a lot more than just $10 billion. They're using their own cash to buy their stock back at $15 billion.
That's right. And also, CBD Insights is a company that ranks unicorns, which are $1 billion plus valuation companies. And they listed Ripple plus one of your other offerings, Dapper Labs, as top unicorns on their list, on their rankings. So that was pretty exciting too.
Yes, that's exactly right. If you're new to private investing, by the way, we have an arrangement with CBD Insights that gives us access to their entire database of private tech company unicorns. And these are all tech companies with valuations of $1 billion or more. So you can for free, instead of paying the very, very large subscription fees. I think if you want to be a professional user of that database and have the same kind of access to us, you have to pay about $30,000 a year. But you can have access to that same database by coming to link to check out our website or our app, and you'll see all of that information that you otherwise have to subscribe to through CBD Insights and quite a hefty fee. You can get it for free, and you can study all you want about all the different unicorns in the tech space, and many of which are obviously available to invest in through Link 2.
That's right. And it's interesting because you can find out things like Ripple has invested in another company on your platform called BitPay.
Correct. You can invest in them too.
You can invest in them too. Yeah. And then you have a company like Dapper Labs, which is another favorite of mine, that predicted for decacorn status in 2022, which is a $10 billion valuation, and is owned by such illustrious venture capitalists as Andreessen Horowitz and others. But they are a level 1 blockchain, not ERC20, not Bitcoin. They are a level 1 blockchain doing some really exciting things. And of course, they came up with CryptoKitties and are doing some other NFT work. But tell us about Dapper Labs.
So that's one of the companies that we love because they are probably the leader in this rapidly developing segment of the digital asset world called NFTs, non-fungible tokens. So non-fungible tokens represent sort of the other side of the digital asset universe, right? Because all the other tokens that have created tremendous value and are increasing by the day are all fungible tokens because they represent effectively cryptocurrencies, things that you can use to transact with. And it's like they're like dollar bills, right? A $1 bill is no different than another dollar bill, right? They represent value, but they're not unique in and of themselves, and you can substitute one for another, and they'll have the same value. $1 bill is worth the same as the next dollar bill. Right? Same thing with, XRP, right? An XRP token is the same value as the next XRP token. Not so with NFTs. So NFTs are unique, and their value is singular to that specific token. And that value derives from the fact that every token has a unique property. So where this whole technology has been applied to, most in the most impactful way so far, have been basically in creative works. So things like digital art or the tokenization of existing physical art. But in all cases, you're taking some form of a creative property that is kind of a one-of-a-kind thing, and you're digitizing it. And digitizing it does certain things. One, it allows you to secure the authenticity of that property. Nobody can replicate or duplicate it and sell a fake, right? Because of the fact that the cryptography allows you to determine which one is the real NFT and which one isn't. The other great attribute of that technology is that because it's in digital form, it now makes that property eminently liquid and tradable. So it's super difficult, for example, if you look in the physical world, right, to take a painting that is very, very valuable and just sell it. You've got to go and physically take it to an auction house. It's got to be secured by brinks, and you got to insure it. And then you got to go to an auction, and then the prices you get at that auction are going to be a function of who came to the auction to bid. There are great limitations to the liquidity and therefore the overall value creation that can be had in that for that art in that form. But once that same property moves into non-fungible token form, the amount of liquidity you can tap becomes endless. Right? You're effectively able to run an auction for that piece of work every second of every day of the week to everybody in the world that might be interested in it.
That's amazing.
So it's really cool, right? When you think about that. And then the third part is that you can fractionalize the ownership. So like I can't fractionalize. It's very difficult to fractionalize a painting, but with NFT technology, right, I can sell bits of that painting, and 200 or 2,000 people can own that painting in common without a lot of difficulty. So those are some of the things that basically reflect the promise of this technology. And you can see it being applied to a whole host of things in the world, not just creative works. Think about real estate, for example, right? Because real estate is non-fungible. My house isn't the same as Linda's house. They're two very distinct physical things. They're in different locations. They have different floor plans, et cetera, right? Those things can be digitized and trade in non-fungible token form. And so this company, Dapper Labs, is on the cutting edge of the growth of this technology. They built their own blockchain called Flow to help support the creation and development of these NFTs as they relate to games. That's the other big application, right? Is in the digital world, video games begin to take on economic value through the different characters in them, through the different locations that are created in these worlds that the video games, are played on, right? And that ecosystem becomes an economy, an in-game economy, and then the players can then begin trading characters, trading merchandise that the characters use, trading plots of land or other, property that are in the game. It's mind-boggling. And I don't pretend to fully understand it, Linda, because I've got a generational gap, right? I mean, my kids probably get it a heck of a lot better than I do. But the bottom line is that you're able to then create these, massive economies through digitization of unique properties, whether they're creative works or whether they're other types of things, both in the physical as well as in the virtual world. And Dapper's on the cutting edge of that because they were one of the first users of that technology to create value through that. There's something called CryptoKitties, which are a bunch of collectible digital kittens. I myself laughed at the idea years ago when one of my venture capital friends told me that he had invested in this CryptoKitties project by Dapper. And boy, was I wrong, right? He was right. He said, this is just the tip of the iceberg, and this thing is going to grow. Well, last year that whole NFT market did about $23 billion in trading volume. The total market, the total value of these NFTs at the end of last year was $41 billion.
Wow.
And it's expected to continue growing at a great pace. So we believe that, by being able to invest in Dapper early, just like with Ripple and a whole bunch of these other companies on our platform, we're basically preparing the way, for some significant price appreciation and profit taking as that company matures and as it eventually goes public.
Yes, and I think generationally it is hard for us to understand CryptoKitties, and I was in the same camp as you where I didn't really get it, didn't really see the value, but what I do understand is their partnership with the NBA, and I think people our age do understand that NFTs with NBA players could be something very attractive and appealing to investors and collectors alike.
100%. And that's, I think in some respects, that's what I really admire about the management team at Dapper was they were smart enough to realize that on one hand, there was this one world, right, that was made up of, our kids, basically, and the world they live in, and which is very, very virtual and digital, and you can create tremendous value in assets. But then there's, our world as well, which has tremendous value already in it. And how do you digitize and use this technology to create certain advantages to what's already there? And the NBA Moments thing is just, in my view, sheer genius. Because they're basically taking video clips, right, of these amazing moments in NBA games, and then they're putting them in digital form so you can own that moment when LeBron does that amazing move where he gets by 4 players and dunks the ball, right? You become the owner of that moment in the form of a digital video clip. Nobody else can own that except you. And if they want to own it, they'll have to buy it from you, right? Mm-hmm. That's kind of a neat thing. And at one level, it's an amazing increase in fan engagement, right? Because you can actually own those moments, not just watch them. But it also, now you've created an asset with future value. And they're going to be doing the same thing with the NFL. They're going to be doing the same thing with UFC. So if you're a big, MMA, mixed martial arts fan, look out for that. And so they're going to continue down this dual path. On the one hand, working with all the leading edge video game developers on blockchain that are creating, games that feature in-game economies with characters and merchandise and properties that have value, right? Supporting that growth of the metaverse. And then on the other side, supporting the digitization of the existing physical world that we know it and all the amazing, singular properties that exist there in terms of these sporting moments, in terms of art, in terms of whatever. So I think it's a mind-blowing thing to wrap your head around when you stop and think about what could potentially be all the applications of this technology. But whatever they might be, right? One thing I feel relatively certain of is that Dapper is going to have their finger in many of those pies.
Yes. Well, Joe, we've talked about Ripple, we've talked about Link2, and we've talked about Dapper Labs. And those are just 3 examples of companies that I am so excited as an investor to have access to before they go public. So thank you for bringing these opportunities to investors and allowing us to have the opportunity to participate in them eventually going public and to benefit from that. That's just an amazing thing to participate in.
Yes, and thank you again for giving me the opportunity, Linda, to talk to you and your followers. Look, at the end of the day, I'll end by reiterating what I said at the early part of our conversation, which is the best way in the long term to earn better than market returns are, 1, consistently invest into private assets, because that's what all the smart money and all the big money are doing, right, on the institutional and the high net worth side of things. And invest early, try to get into some of the foundational names and in the main strands of technology innovation and try to get into those names earlier rather than later.
Exactly. Well, Joe, thank you so much. It's been such a pleasure to talk with you. I hope we can do it again sometime.
I would love that, Linda. Thanks again for the opportunity.
My pleasure. Well, that was an amazing interview from Joe, and I'm so grateful that he came on the podcast so you could hear that. If you're a fan and investor in XRP like I am, and you want to invest in Ripple Labs, which I've also invested in, Ripple is just one of the companies on the Link2 platform, as you heard. And we talked about Dapper Labs and Link2 and mentioned BitPay. There's also Uphold and BlockFi and many other companies, some of which have nothing to do with crypto or blockchain. What you need to know is the minimum initial investment is $10,000. You do have to be an accredited investor. To become an accredited investor, you need to have $1 million in assets beyond your primary residence or $200,000 of income for 2 years as an individual or $300,000 for 2 years as a couple. Or you can also qualify by having your banker, broker, lawyer, or accountant write a letter verifying your net worth. Or if you're a registered financial representative with a Series 7, 65, or 82 license, any of those ways you can qualify as an accredited investor. International investors are also welcome, and assets that you can use to qualify as an accredited investor can be real estate other than your primary home, a business, retirement plans, cryptocurrency, a rare collection, or other valuable assets, or a combination of these items. And through the month of May, a minimum $10,000 investment invested in Ripple will get you a $1,000 bonus of XRP. and $500 for a non-Ripple purchase. Plus, when you sign up with my link, you get a $250 investment credit. That means your first $10,000 investment in Ripple will really only cost you net $8,750. And if you don't qualify yet as an accredited investor, no worries. I'm confident you'll get there, and I'm delivering my best on podcasts to assist you. If you are an accredited investor and want to get started, simply click the link attached to this podcast in the show notes, and let's get started. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.